So we have to talk about this complaint that was filed against the Department of Education, and not only just the Department of Education, but also the three major credit reporting agencies, Experian, Equifax, and TransUnion, because this is an important complaint, especially if you are a student loan borrower and you have information from the Department of Education reporting to your credit report. Also, if you're someone that has dealt with your student loans being in default, this is a very important complaint for you to be aware of and to potentially become a part of because the goal of it is to turn into a class action lawsuit. So what this class action lawsuit is alleging against the Department of Education, because if you're dealing with student loans, you know how crazy the entire system is. Not only with the current administration trying to dismantle the Department of Education, also dealing with just trying to go back into repayment, coming out of COVID, all the things that happened with all the information that was taking place from the Biden administration to the transferring over to the Trump administration, just how things were handled with notifying borrowers about repayment. And what well over 5 million plus student loan borrowers who are currently in a default status, meaning they're at the point of collection, garnishment, all those things. And then we also have another 4+ million more that are headed into default. What this lawsuit speaks about is more or less is how the Department of Education handled themselves or mishandled themselves. And in the process of them mishandling themselves, which means the information, because if you're in default, and if you have loans that are in a delinquent status, this information is being reported to the credit reporting agencies. And first and foremost, when it comes to information being reported to credit reporting agencies, there is no law that states that a creditor must report any of the transactions or anything of that nature that deals with anything that we borrow to the credit reporting agencies. And not only that, these credit reporting agencies make millions, billions of dollars from the information that's being reported to them. So let's get started in this lawsuit because I want you guys to read this, and it's just so much to it, and it just lets you know even more and even further as a student loan borrower what actually is taking place behind the scenes, and not even behind the scenes, it's in our face with the Department of Education. Not only that, how the credit reporting agencies also can be held liable for the information that they are allowing the Department of Education to report, and not only and in addition to that, how you can actually sue the Department of Education for them violating inaccurate information, unfair information, misleading information to the credit reporting agencies. So if you want to look at this lawsuit, you can just go and type in just the civil action number here, and it'll bring the information up for you. But let's get started with the preliminary statement, okay? So, and I'm going to break this down into sections. We'll start with some pages here, and then I'll do a separate one because it's a lot of information to get through. So I'll break this down in a few different sections, okay? So it tells us this is a consumer class action brought for willful violations of the Fair Credit Reporting Act, and then they give you the sections, which is the entire FCRA against the defendant, Linda McMahon, in her official capacity as the Secretary of the United States Department of Education. They also tell you against the defendant, Equifax Information Services, Experian Information Services, and TransUnion LLC. So these are the top three credit reporting agencies. So we know that this class action is being brought against not only just the Secretary of Education, but also all three of the credit reporting agencies. So it tells us it challenges the reckless, predatory, and unlawful practices of the United States Department of Education, which has forced millions of borrowers into reported serious delinquency and even wrongful default, destroyed their financial futures, and extracted billions of dollars by way of maliciously negligent credit bureau reporting and predatory lending and abusive collection practices. So let's just think about it with student loans in general. When you are first starting out going out for your undergraduate degree, the Department of Education doesn't even require for you to have a credit score, so to speak, in order for you to obtain federal student loans. I mean, for a lot of student loan borrowers, their very first introduction to credit is via a student loan. So let's think about, like I said in the beginning, there's no law that requires a creditor to report any information to the credit reporting agencies. So we know that if the Department of Education is reporting things, especially they don't require for you to have a credit score when you are obtaining these loans for an undergraduate degree. So we know that the reason behind them reporting the information, what the tactic is for them to even report the information. But let's keep reading. I don't want to speak too much ahead. So it tells us since January 1st, 2025, over 5 million individuals have been improperly declared to be in serious delinquency, and many also declared to be in legal default on their federal student loans solely because the department has failed in its basic duty to competently service its borrowers. Let's not even get started on the servicing part. We're just talking here with the Department of Education, but just think if you are a student loan borrower and just how trying to get in contact or talking to your loan servicers, how just chaotic that has been. The department projects that the number of student loan borrowers who will be declared to be in a serious delinquency or declared to be legally in default will double to 10 million by the end of 2025, and that's what, a month away, and soar to 20 million by April 2026. The department is the largest lender of consumer credit in the United States and has operated with the intent of extracting enormous profits by way of originating student loans and charging significant fees and interest rates on those loans. The department, in or about 2010, entered the consumer lending market on a commercial basis in order to profit from American citizens' desires to better themselves through higher education. Critically, the department has outstanding loans on its books of more than 1.6 trillion for more than 43 million borrowers. So that's another reason too why you have the Department of Education. And when we hear all this talk about them wanting to transfer the Department of Education over to the Small Business Administration, all those things to transfer all of these loans over. I mean, if you got 1.6 trillion on your books, you can get that off of there. But let's keep going. But it does not have the operational infrastructure to properly service, keep track of, or collect on its student loans granted. Due to the department's operational failures, millions of Americans have been placed wrongfully in serious delinquencies or legal default by the department, unfairly reported as delinquent or in default to the three major credit bureaus, Experian, Equifax, and TransUnion, and had their credit scores negatively impacted as a result. The department is legally designated as a furnisher of credit information to each of the three major credit bureaus, and as such is legally bound to adhere to the Fair Credit Reporting Act. So let's go look at the Fair Credit Reporting Act, okay? But let me read this first. The delinquency and defaults being reported to the credit bureaus are not the product of borrower irresponsibility. These defaults are the willfully negligent direct result of the department's collapse in servicing capacity, a collapse caused by lack of department leadership, understanding how to meet operational responsibilities, mass layoffs, inadequate contracting with servicing organizations, broken operating systems, and underfunding for student loan servicing, along with a lack of attention to the fiduciary duties associated with loan servicing, all brought into focus as the department restarted payment obligations in 2025 after the COVID-19 pause of more than 5 years in deferment. So we know that in 2020, when the COVID-19 pause happened, some borrowers were not required to make any payments on their federal student loans because they were paused due to COVID-19. When all of those things restarted again, the Department of Education, I mean, after 5 years of not being in payment, people move, phone numbers change, emails change, addresses change. And another thing or two, as far as the Department of Education reaching out directly reaching out to us via email, there's nothing in the Higher Education Act that states that that's their primary point of contact for student loan borrowers. And they have a job, they have a duty to make sure that they have up-to-date information, for borrowers when they're sending out these bills. And that was something that was just recently when they were talking about the defaults, that if they send it to you through email or their last known address, they were not going to do any additional work to find you. They were just going to assume that you got the information about, you needed to go into repayment or that you need to pay, which is wild. But let's go to the Fair Credit Reporting Act, because the Department of Education can be sued under the Fair Credit Reporting Act, okay? And this is what these lawyers are suing them under, okay? Because they are furnishers of information. So if you've never been to the FCRA, if you never looked at the Fair Credit Reporting Act, you can just go to Google and type in FCRA, and you'll be able to look at the PDF document, okay? And it's important to have an understanding of the FCRA, especially if you are trying to get something corrected on your credit report, okay? So here, when you go into the contents, this tells you everything that you need to know that's to come in the Fair Credit Reporting Act. First and foremost, we get to the congressional findings and statements of purpose when it deals with the accuracy and fairness of credit reporting. And this is the reason why Congress made the Fair Credit Reporting Act. The banking system is dependent upon fair and accurate credit reporting. Inaccurate credit reports directly impair the efficiency of the banking system. And unfair credit reporting methods undermine the public confidence, which is essential to the continued functioning of the banking system. An elaborate mechanism has been developed for investigating and evaluating the creditworthiness, standing, capacity, character, and general reputation of consumers. Consumer reporting agencies have assumed a vital role in assembling and evaluating consumer credit and other information on consumers. There is a need to ensure that the consumer reporting agencies or the credit bureaus exercise their grave responsibilities with fairness, impartiality, and a respect for the consumer's right to privacy. Okay, let's go back. And we're going to go into Regulation V. This is also a part of the Fair Credit Reporting Act. But what I like about the Regulation V is that it breaks it down even more. So if you're confused, like what is a furnisher of information? In the FCRA itself, it doesn't give you the definition of what a furnisher is. It tells you what the duties are, but not necessarily what the definition is. So that way that we're clear what the Department of Education is and how they are defined under the Fair Credit Reporting Act. So when you go to Regulation V, and this is just 1022, 12 CFR Part 1022, you'll be able to just put that into Google and it'll come up. But we're going to go to Subpart E. This is duties of furnishers of information, which is the duties of either the Department of Education, who's furnishing the information, the servicer, or even whoever your creditors are. Okay, this is what their duties are. So it tells you what the purposes of this subpart is and what accuracy means. That information that a furnisher provides to a consumer reporting agency about an account or other relationship with the consumer correctly reflects the terms and liability, the consumer's performance and other conduct, identifies the appropriate consumer. But here, a furnisher means an entity that furnishes information relating to consumers to one or more consumer reporting agencies for inclusion in a consumer report. An entity is not a furnisher and this is just more or less when they tell you what is not a furnisher. But we know that the Department of Education, they are an entity that furnishes information relating to you, the consumer, and they report that information to or furnish that information to one or more consumer reporting agencies. I like this word here, integrity. What it means, that information that a furnisher provides to a consumer reporting agency about an account or other relationship with the consumer is substantiated by the furnisher's records at the time it is furnished. Is furnished in a form and manner that's designed to minimize the likelihood that the information be incorrectly reflected in a consumer report and includes information in the furnisher's possession about the account or other relationship that the Bureau has, and determine that the absence would likely be materially misleading in evaluating consumers' creditworthiness, standing, capacity, character, reputation, characteristics, or mode of living. And then they give you the other section. And for me, integrity is important because we have a lot of student loan borrowers who have reached the point of having their student loans discharged, but they still have this information, this balance being reported to the credit reporting agencies. And for me, I said, this is where we get more or less into, not only the accuracy and the fairness, but also the integrity of the information, because it's showing, first and foremost, what the furnisher, the Department of Education's records are at that time. If you receive that email that you have your loans, that your loans are being discharged, they have that record as well. And it takes 2 seconds for them to report that to the credit reporting agencies, but I'm gonna stay on track. Let's go back to the lawsuit, okay? All right. Okay. So, all right, so let's go down. Due to the department's administrative policies and practices, millions of student loan borrowers have tried in good faith to become current in their student loan obligations, but the department has made it impossible for them to pay or to even contact someone about restarting repayment. Instead, student loan borrower accounts are mechanically marched through 30, 60, 90, 120 delinquencies, and then declared to be legally in default at 270 days along the way, being unfairly reported to the credit bureaus as being delinquent or in default. Once declared in default and even periods of serious delinquency, the department knowingly reports the unfair and inaccurate default and delinquency statuses to the 3 major credit reporting agencies. Defendant TransUnion, Equifax, Experian, devastating borrowers' credit scores, increasing their cost of borrowing, and triggering wage garnishment and other draconian collection measures by the federal government. And that's just more severe collection measures. The department and the U.S. Department of Treasury are also preparing to engage third-party private collection agencies to start hardcore collection activities as well. The scale of the harm is staggering. Each plaintiff and member of the class will suffer at least $100,000 in damage due to inflated interest rates, ruined credit scores, loss of job and housing opportunities, and predatory collection practices, not even considering, you haven't even got to the harmful emotional stress. multiplied across 5 million borrowers currently declared to be in default, the department misconduct has and will cause no less than $500 billion collectively in personal financial damage, a figure that will rise to $2 trillion by April 2026 if left unchecked. So the harm that they have caused is even more than the debt within itself. Within the debt itself, the harm that has been caused to student loan borrowers. And this is just more or less in the reporting of the information, their collection practices, and how they have come about trying to collect on these student loans. So just think about the amount of borrowers that we have currently right now who are stressed about making monthly payments. How are they going to survive? And you have information that is being reported to the credit reporting agencies for years. For some borrowers who've been in repayment for well over 20, 25 years, you've dealt with a defaulted loan or you've dealt with a late payment from the credit reporting agency, one of those 30, 60, or 90-day payments, late payments. And just to think of what that does, not only to your credit score, but we have employers that use our credit reports in order to look at your character. That's what their credit report shows, your standing, your character, the capacity, all of those things. They're looking at your character. And to think that if you have student loans that are being reported to your credit report, mind you, student loans that you did not need a credit score to take on in the first place that are now being reported to the credit reporting agencies, and that information is being reported inaccurately or unfairly and even incomplete, what is done to you as a student loan borrower. Okay, let's keep going.